Hello, Cleveland, and everyone from everywhere else. Welcome to your roughly 15-minute TA for Saturday, May 31st, 2025. Hope everyone's doing great. Hope you've had a great week and a great month. Before we get started, please give me a like, give me a subscribe. Really helps out the channel. I would very much appreciate it, and I will love you forever if you do. All right, let's dive into these charts. All right, so from yesterday, or not from yesterday, we're going to start off here on the monthly chart as the monthly candle has closed. The May candle is closed and the June candle has opened at 8 p.m. tonight. That's when the daily that's when the markets close because everything goes on UTC time. Yeah, UTC. Anyway, we're gonna read the little numbers for you up here, these numbers, and let's see where things were. So we opened up May down at 94,290. We reached a new all-time high of $111,965. We reached a low before that of $93,450. That was closer towards the beginning of the month. And we closed the month out over 100K at $104,653 thousand. It's a good place to be. We overall, open to close, month moved up 11%, $10,000. Just over and 11%. Good stuff, good stuff. But where is it going now? Well, if our bull flag plays out, and we got to move this adjustment because I had it down here at the 786, but really it's down here, right around here at 74, we'll just say. And that would bring our measured move up to 130 here on the monthly chart. We can bring this up a little higher too. We're going to include the wicks. Are we including the wicks? Oh, we weren't including the wicks. Let's bring that back down. There we go. Yeah. So that's really all we're looking at here on the monthly, as long as patterns go. Well, there's this possible double top. Possible double top. Now, if that double top does play out, so like let's say we don't get a new all-time high here in this month, or if this month really goes negative. I mean, like if this month goes sideways and then July we break out, that could happen too. If we go sideways, that's fine. There's still a possibility to break out. But if we start fumbling down, if June gets even lower than those May lows, well, then expect this double top to play out. Where do double tops play out? Well, we've talked about this before. It wouldn't be a straight line down. It would be something more like down, up, down, up, down, up. And then it would end up somewhere right around here where it started. That's a horrible X. Let me do that one more time. Try that one more time. X marks the spot. There you go. Yeah. X marks the spot. Where would that be? That would be somewhere, about a year after, a little bit less than a year. It'd probably be closer to May. Usually they happen about a year, so we'll make the X more like here. There's my X. I'll delete this one. Delete. No, get out of the drawing and delete. But yeah, that also has a possibility of being the cycle low. That'll be about a year after our high, and that would be right around where we always see our cycle lows. I can show it to you back here on the weekly chart. Have that all out there, top to bottom. Took 52 bars, 59 bars. A little long that first time, but yeah. So 52 bars. If we go a year, that would be May 2026. Yeah. Not necessarily that we will go there, but yeah, we may. Now, why do I say that'll be the bottom? Well, let's go back to this chart here on the weekly, since I already drew it out here. Let's say I was tweaking around with this making some adjustments. So this was if we go 74% down from where we are now. If this is the high, why 74? Well, because it's been 86, 84, 77, although this has been growing that gap. So maybe it's not going to be 74, but closer to like 70, because the difference here is 2, right? The difference here is 7. So 2 to 7, the difference between 2 to 7 is 4. So let's say that the next difference between the differences would be 4. So 7 plus 4 would be 11. So let's say it goes 11 less than this. So 60, that would be 60. 66% down. So let's see, 66% down. We're looking at around 37 if we were dropping from here. And if we were to drop from where possibly, let's say 130, let's say 66 still, well, then we're looking at 44. Let's say we get up to 150 as our cycle top, and we drop 66. Well, then we're looking at around 50K, roughly. So there's our kind of bottom rough estimates. First target for bottom would be here, 57 to be the bottom, to be the bottom of this move here. But if you look, usually when we get into bottoms, I'm gonna make you purple. Why aren't you purple? You're purple on all my other charts. Why aren't you purple here? 200, why aren't you purple? There we go. All right, sorry about that. Where is my purple line? Oh, the monthly doesn't have one? There haven't been 200 monthly candles? Really? Guess not. Well, we can bring the 100 back. Let's just bring the 100 back then. I didn't realize there weren't that many candles. There just hasn't been 200 candles on the monthly chart yet. Oh man, that's funny. All right, well, we do tend to come back down to the 100 at least. We have in the last cycle and in the 2013 cycle, we came down to the 50 there. Came past the 50 on that one. So if the 50 keeps moving up, it'd probably be right around that 56 level when bottom hits. If we go a little lower down to this guy, well, it'll probably be closer to that 36 target that we just laid out. But it all kind of depends on where June goes. If we see June get lower than those May lows, then that'll be a bearish engulfing candle, and we're for sure going lower. If we just see some lows that don't break lower than the May lows, then there's still a chance for this upshot. Really, as long as we stay over this downward trending now support, put it in support, green. As long as we stay over that in June, there's still a chance for those higher highs and another all-time high up here at 130. Stokes are pointing up. That's a good thing. RSI, however, is putting in lower highs, while the price action was putting in higher highs. So we're getting closer towards the end of this bull cycle. There still could be some upside, but at the moment, these are heading down. So we're getting closer towards the end of the bull cycle than we are the beginning of the bull cycle. You see how here in these previous ones, there was a big wick or a big RSI, and then it came down. Big RSI beforehand, and then it came down. Then the top hit. Not really so much in the 2013 cycle, but let's look at this cycle here. 2012. I'm sorry, 2018. This is the 2013 cycle. Same deal. Yeah, there's same deal here. You see how RSI shot up here first, and then the peak, and then kind of came down. And with the next peak, it was much lower. So that tends to happen during these cycles. You can see it better in this last one. Peak. Next peak is lower. Next peak was even lower. So yeah, let's see what happens. Here was our first peak.
To understand that.
Oh, get out of here, Bixby. There was our first peak, and then here's our second. And this one looks like it could be going lower. That doesn't mean we won't get a high price-wise, especially with the Stokes pointing to the upside, but it means we're closer to the end of this bull cycle than we are the beginning, I think. I don't subscribe to the super cycle theory. All right, let's take a quick peek at these guys here. I'm getting long-winded here, I guess. A little long-winded. Whoopsie doopsies. I don't want to move you. I want to lock you, though, so I can't move you. There you go. All right, our bear flag. Where were we talking yesterday? Yesterday was the 30th. Did I make a video yesterday? Or did I forget to make a video yesterday? I did. I made a video yesterday. All right, the 30th. It was probably around this time of night, right around here. We were in this bear flag. The bear flag came down, not quite to its. Oh wait, no, we were down here. Yeah, we were down here. We were looking at this bullish divergence. Didn't quite play out. In fact, the bullish div disappeared because RSI kept moving down. So that's gone. Bear flag it's still pretty much there, this bear flag. Just got to adjust it a little bit. Here's our lower bound for the flag. Here's our upper bound for the flag. And if we were to take a measured move, we would get, from our current price position, 101. And from, let's say from here, 100. Which is, probably where we're heading. Stokes are overbought. RSI is having trouble busting out of bearish territory. Although, if it can catch here on the signal line, bounce off the signal line, there's a chance. Let's take a look at the 22 real quick. So look at that. The 22 Stokes are oversold. This could pop back off. This could pop back up. If it pops up a little bit, there's a little bit of a bull flag forming too. If this bull flag pops up, I'm not going to draw the full flag, but I'll take a measured move real quick. If this bull flag pops up, we'd be back over the 200 and out of that bear flag on the 90. Let's look at the 5 real quick. 5 Stokes are moving to the upside, although they're finding some trouble getting out of bearish territory. RSI still in bearish territory, no bullish divs. Yeah, we are over the 200 though, so if we can stay over the 200 here on the 5, that'll keep pushing up and push that 22 up. 1 minute lost the 200 though, back here in about 6:30. It's pretty much stayed under it since then, a little bounce up. But Stokes were oversold and are heading to the upside again. This could have been a little bottom there. Could have been. We got some bullish div here on the lower lows here on price action, higher lows here. So yeah, bullish div here on the 1 minute. That could turn it around, bring it back up over the 100 or the 200. If it can get over that purple line, that's very important. If it gets over that purple line, this guy stays over the purple line and keeps on moving up, which we want to see, because if that can keep moving up, that'll drive the 22-minute Stokes up, RSI up, back into bullish territory, and push this guy over the 200 on the 22, which in turn would bring us out of this bear flag and closer to breaking back over the 200 here on the 90. But the Stokes are overbought. They can get stuck if the 22 can push up, but we're watching those lower time frames. If they can't catch, then we're going down lower. We're going to go down lower. We're not going to catch on the signal line. Get down to the bottom of the bull bands at the very least. And then we'll see if this moves down to our next target, which is here off of the 6-hour chart. The symmetrical triangle that seems to be playing out down to 99.6, our next closest major support level. We do have this support level as well. However, if we find support there, then we're just kind of creating this head and shoulders pattern. I think I drew it out on the daily. Yeah, we drew it out on the daily here. Yeah. So the head and shoulders would play out if they kind of got stuck down here at around 102 and then just moved sideways. Then the head and shoulders would play out down at about 96K. But right now we're watching for this move down to 99.6. And honestly, I'd rather see a move straight down to 99.6 than to find this head and shoulders, because the head and shoulders would take it down even further. I guess we'll see. Still seeing this hidden bullish divergence, price action putting in higher highs while RSI puts in lower highs or lower lows, higher lows. Stokes are pointing to the upside still, but RSI is in bearish territory. I guess it really depends on the 90 with this guy. The 90 can't break up out of that bear flag. You won't see it here, but it won't break up out of that bear flag. If the 22 can't push, then this is just going to fall further, most likely. You know, hopefully, honestly, hopefully not stop at 102. I don't want to see that head and shoulders play out. I'd rather see price action drop down to 99.6 and then bounce from there. That would give us a higher low, not this low, but this low. Give us a higher low. That higher low is something that we need in our pattern, because right now, like I've been saying for months, we've been going up and to the right for months. We need a pullback, one that'll, you know, put in a higher low for us. And I mean, as long as we don't break under these here April lows, then this bull run is still technically possibly on. If we start breaking down though past this 200 mark down here at 96, which is where this head and shoulders would take us, if we lose that mark, well then the chances of continuing this bull run are slimming, very much slimming. All right. Stokes are oversold though, and RSI is trying to stay in bullish territory here. So really we're watching those smaller time frames. If they can turn around, then we're seeing a turnaround. Otherwise, we're heading down. And you know where. Either 102, hopefully not. Hopefully just bust on through there to 99.6 and then bounce from there. But we'll see what happens. We shall see. All right. That's all I got for you. You got my targets. You got what I think is happening. I think we're going down lower. Well, I think there's a chance for a reversal here. So we'll say 50-50. Possibly going up, possibly going down. Can't really tell until we see if these lower time frames, like the 5 minute stays over its 200, if the 1 minute can break up over its 200, and if the 22 can push up and break over its 200. So basically we're looking for the 1 and the 22 to break over their 200s to indicate to us that we are reversing. If that can't happen, then the 90 has no chance of getting back over its 200, and more than likely we're heading down to the 200 here on the 6-hour chart, which would meet price action roughly where our target from the symmetrical triangle ends at around 99.6, our last major support level. Next major support level. All right, save. You guys are awesome. Thank you so much for watching. Sorry for going a little long, but it is the monthly candle close. Music courteously provided by Luminist, Valoa, and Sasquatch. Once again, thank you so much for watching. You guys are awesome. Much love, and I will see you tomorrow.